Hey, what's up guys? Frank here with another video, and today I wanted to talk about one of my financial goals that I'm about to reach probably next week. And I wanted to talk about it simply to give you some kind of value, and if it can be useful to you, then that's my goal, right? And so first of all, before talking about what I'm doing, I just want to point out that I'm not really a financial advisor, okay? And I'm simply sharing what I'm doing. I'm simply sharing my goal. And so if you're going to make decisions about what to do with your money, well, you should do your own research, okay? Like, don't copy what I do. Do your own goals and make your own research, okay? And so, simply put, my goal was to maximize my contribution with my TFSA saving account with high dividend ETFs. Okay, and so first of all, before I start, I want to point out who this video's targets. And so this video is mostly for Canadian, because here I'm mostly going to talk about the TFSA, and the TFSA is a Canadian thing, and so I'm not sure how other countries work, if they have something similar. And so if you're outside of Canada, I would advise you, if possible, to check if something similar to the TFSA exists, okay? And so another thing that I'm going to talk about is that later in the video, I'm going to talk about the inconvenience that I have with owning a business and having my own corporation. And so there's a few things that you have to keep in mind if you're in the same situation as me. And the idea here is that I'm mostly going to talk about like tax efficiency. And so if you're an employee and if you're not a business owner, or maybe you're just self-employed or whatever, maybe your situation can differ from my own, okay? And so that's something to keep in mind. And so the first thing that I want to talk about is that, yes, I'm going to talk about the TFSA, okay? And so I just want to explain rapidly what the TFSA is in Canada, okay? And so basically the TFSA is an acronym for tax-free saving account, okay? And so the cool thing about this account is that, it's tax-free. Like, that's what the name says, right? And so the difference between the normal saving account and the tax-free saving account is that all the money and the income that you make with this account, with the saving account, well, it's tax-free. The account is tax-free. And so all the income that you make in this account, which basically means any interest or dividend or capital gains that you make in this account, is tax-free. Okay, and so that's a pretty cool thing to do, because if you have a normal saving account, yes, you might be able to make money, but all this money that you're making in this saving account, well, you have to pay taxes on these gains or this on this income when it's time to make your taxes. Okay, and so having this tax-free saving account allows you to use this tool to make money, but in a way that is tax-free, so that you're able to make more money. Okay, and so you can use this account in many ways. Okay, and I mean, in this account you can put different things. You can not just, yes, you can put money, but you can also put different things, such as mutual funds, ETFs, stocks, bonds, and other things. Okay, and so here I'm mostly going to talk about ETFs, but you're not only limited to ETFs. Okay, and so yes, you can put money in your saving account, but it's not just limited to your money. Okay, and I'm going to talk about ETFs, but it's not only limited to ETFs. Okay, and so there's more into the TFSA thing, but I'm just gonna leave it at this. And again, if you wanted to use your TFSA, maybe I can make more video more into that, or maybe you can make your own research. Okay, and so the second thing that I want to talk about is, what are ETFs? Okay, and so basically, again, it's an acronym for exchange traded funds, and basically ETFs is an investment fund traded on the stock market and the stock exchanges. In my case, I use Quest Trade to make my trades and to exchange my ETFs. And so basically it's kind of very similar to an individual stock that you could buy and sell, okay? But the main difference between individual stock, like again, a stock is like a part of the company, if that makes sense. Okay, it's a stock in one company. But the cool thing about ETFs is that they hold multiple assets, and so it's a groupment of multiple companies or multiple assets, which allows you to easily be more diversified. And so your portfolio is diversified. You see, when you buy an individual stock, yes, it's pretty cool, but you just want to get one of that stock. But when you buy one ETF, you actually get more companies within that ETFs, okay? And so basically the ETFs is a regroupment of multiple companies and multiple assets. And so when you buy one ETF, it is way more diversified, okay? And because it's way more diversified, it allows you to reduce the risk compared to investing in an individual stock. Because you see, like when you buy an individual stock, well, you invest in one stock, and it's all on the stock. If the stock goes well, then great, it goes well. But if the stock doesn't go well, then it doesn't go well. But you see, since an ETF has multiple companies and multiple stocks or whatever in it, and so even though one might go bad, well, all the other ones make it so that it's not that bad, okay? And so in the end, an ETF I think is way more safe, okay? And in my case, what I do is that I mostly focus on high dividend ETFs, okay? And so basically, a dividend is that every month or every quarter month or maybe every year, it depends on the ETF. And so basically, a dividend is simply they give you money for holding this ETF, okay? And so stocks also have dividend, but ETFs also have dividends. And so I try to focus on high dividend ETFs so that I'm able to get more money for each dividend, if that makes sense, okay? And so the main question is why I decided to invest in ETFs using the TFSA. And so there's one thing that you keep in mind, and that the TFSA is a really great tool, but you have to learn how to use it properly. And so the TFSA is made of so that you should very much think long term with it, okay? And so in order to do that, in order to think long term, you should first of all start as soon as possible to like make sure that over time your investment are able to grow tax free, okay? And so that's why I decided to maximize as soon as possible the TFSA, so that everything that I put in it, it's able to expand and grow exponentially in the future tax-free, okay? And basically that's why I also decided to maximize my contribution that I was allowed this year and all the previous years, so that I'm able to maximize my gains and the growth over time that is going with it, okay? And so obviously I'm going to maximize probably like next very soon. I'm going to maximize this, and every year the limit of this contribution increases, and I will obviously like invest this contribution in the future, in the future years. But I also decided to invest ETFs because I believe that ETFs are a relatively safe option to invest, okay? It's actually quite boring what I'm doing. Is that my goal is that I'm basically using my money to invest in ETFs, and then I simply forget about it, okay? Because ETFs are quite, I believe that ETFs are quite safe, and so by investing in ETFs, I'm able to place my money in these ETFs and then just forget about it, okay? And by forgetting about it, it allows me to maybe focus on other things and other businesses, and it allows me to move on with my life, if that makes sense, okay? But you see, by forgetting about it, it's still making money, okay? And over time, even though I'm forgetting about it, the capital gains and the dividends are going to grow exponentially tax-free in the account. Because what you can also do is that, I talk about the dividends, but you can reinvest the dividends using what is called as a drip. And so basically the dividends, you reinvest the dividends, and so you're able to make more dividends in the future so that it grows exponentially tax-free, okay? And this is one of the reasons why I also focused on high dividends ETF, so that I'm able to get the higher dividends, and then I'm reinvest the dividends so that I get more dividends in the future. So, it grows even more. But again, it's a very long-term strategy, okay? And I think it's relatively safe, and I call it very boring, because in the end, you're just placing your money and buying ETFs, and you just kind of forget about it, and I'm gonna check it maybe in a few years or maybe in even decades if it's still doing its thing, okay? So it's a very long-term strategy. And so the last thing that I wanted to talk about is related to having a corporation and being a business owner. And so if you're an employee and if your situation is different than having a corporation and owning a corporation, then these things might not apply to you, okay? One thing that you have to keep in mind when you have a business is that usually when you have a business, all your revenue goes inside the business, which is basically another identity. And so since the TFSA is a personal saving account, I own the TFSA and not my business, then becomes a little bit tricky, okay? Because TFSAs are not for a corporation, it's for me. And so for that, I have to give myself a salary, okay? And usually when you have a business, it's quite a good practice to try to keep the money inside the business and also to keep your salary as low as possible, because by keeping the money inside the business, you get the tax benefits from the corporation, and also by limiting your salary and keeping it as low as possible, you basically pay less taxes at the end of the year, okay? And so by having a lower salary, you pay less taxes personally, okay? So what I'm going to talk about here is mostly about taxes, okay? You have to keep in mind that you have to pay taxes personally, and also you have to pay taxes for the business, okay? And so what I'm going to do probably by the end of the year is that to lower this higher salary that I have to invest in the TFSA, I'm probably going to invest a little bit in my RSP in order to lower a little bit my personal taxable income for myself and not the business. That was my financial goal for this year, and I hope that this video was helpful to you, and let me know if you have any question, okay? Peace.